Okay, folks, welcome to the Contrarian Trader. This is Bob Desmond, and tonight I'd like to discuss my call to sell shares, Salesforce.com, CRM the symbol. Before I get to the video, I would ask if you're watching this on YouTube, please subscribe to my channel. If you're watching this on Twitter or StockTwits, please follow me. And if you're watching this on my website, please enter your email address for future videos. We hate spam too. You will not be spammed. Okay, so a brief overview of Salesforce.com. What you're looking at here is a weekly chart. You could see we had a fantastic rally of Salesforce.com up and into February of 2014, where we pierced the upper band of the Bollingers and we flashed a key reversal and pulled back to the lower band. No big shock there. This is a big move higher. A big rally off of 3609 up to 67. So we had a big pullback. The pause that refreshes, that's fine. We respected the lower band of the Bollingers, and we proceeded to rally into November, where we put in a high of 64.74. Now, what's critical to keep in mind is that we were in a really nice triangle formation, and we finally broke out of that triangle formation in October. And one thing I teach my members is to not chase stocks higher through their upper bands of their breakout points. Let's see if they can consolidate. Even better, pull back down, retest the breakout point because it acted as resistance if the rally was for real. So that pullback to prior resistance should now act as support. Now, there's a phrase that I use, it's called a breakout point failure. And it's one of the most ominous events that can happen with a stock. And you usually see it during periods of market tops, or at least the peak of an individual name. So what is a breakout point failure? We had a beautiful consolidation within a triangle formation, a breakout, a couple of weeks of consolidation, some bottoming tails, signs of support, and then on the fourth week, it just smashed back down into that prior trading range. Now, more often than not, I've been doing this for about 24 years now. More often than not, when you see a breakout fail, it will normally, at a bare minimum, retest the prior lower band of support, and in all probability, it will break that support level. So that's why I've been keeping an eye on Salesforce.com. So while 2 weeks ago, it was able to recapture this breakout point and was able to just barely close back above it last week. So fast forward to the week of December the 8th, and we smashed through the lower band of a prior support level, and we did so, let's go to a daily chart, we did so on very heavy volume. This is a sign of institutional distribution. You saw it back here in late November. We had a very, very brief short squeeze. You could tell it was a short squeeze because of the light up volume, and then we just rolled right over again. But when you're thinking about selling shares of Salesforce.com short, you need to use a weekly chart, and this is what I teach my members. You need to use a weekly chart due to the fact that you need to have a clear picture, a macro overview. A daily chart is too noisy. You need to have long-term support and resistance levels broken. And you saw that today. And you saw this break on high volume. Now, what caused me to take a look at CRM, besides the fact that we had a breakout point failure? Well, if you take a look at same chart, weekly chart, you could see that while the S&P 500, which is overlaid here now in black line chart, broke out to all-time highs, Salesforce.com failed. It was a laggard, and it is an S&P component. So we had a prior high of $67 per share. We pulled back, attempted to take out the prior highs, put in a lower high or a double top at 64.74, while the S&P 500 proceeded on to new highs, and you saw a big down volume bar a couple of weeks ago, another clear sign of institutional distribution, lower highs on Ultimate Oscillator. Now, I'm a purely technical guy, folks. I mean, yes, I could argue that the stock has no earnings. Yes, that's true. Its forward-looking PE is 80, but the same could be said for Amazon.com with no earnings and a forward-looking PE of 300. It's a market leader. It needs to be respected for that. It has a high growth rate, and that supports the PE. So that's probably the least on my list of reasons why I would want to sell shares of Salesforce.com. The reason why I am very bearish on the name is due to the fact of just pure price performance, folks. The charts do not lie. We have a double top. We have a laggard relative to the S&P 500. While the S&P 500 broke out to new highs, Salesforce.com broke down. It had a breakout point failure out of a solid formation, and it's now broken down below the lower band of its prior triangle formation. Now, the caveat. We need to have a little bit of humility. I could be as bearish as I want. I could speak my book, all that I want. But would I go jumping in tomorrow and taking my nest egg, my 401k, and shorting Salesforce.com? No way. Why is that? It's due to the fact that besides of money management issues, we probably wouldn't last long in this business. But the real reason is that this is a weekly chart. It's only Monday. We have 4 more trading days left in the week. Can we get a rally off of $56 per share? And could we close back above the support level, thus negating my argument? It's quite possible. It can definitely happen. So we need to be open and honest with ourselves and appreciate the chart that we're using. And in this case, it's a weekly chart. And I'll be going over the chart on a daily and intraday basis with my members. So folks, if you like these videos in the future, again, please, if you watch this on YouTube, subscribe to my channel. Like me if you could. If you're watching this on StockTwits or Twitter, I would ask that you just follow me. Watch this on the website. Enter your email address. Again, we hate spam too. Merry Christmas to all if I don't speak with you. Happy Hanukkah. Be well.